Hello traders, Gary Wagner here. It is 12:02 in Honolulu, 5:02 in New York on Tuesday, 28th day of February 2023, and this is the Daily Report for gold and silver. Gold will finish out the month of February with a extremely poor performance, down approximately 5% on the month. This is the worst monthly drawdown since the middle of 2021. That being said, over the last 2 days, we have seen the potential for a pivot based upon the green candles that formed over the last 2 days. Today did have the lowest value since the correction began. However, it did have a higher high and a higher close than yesterday's close. Also, we sent out a trade alert to buy on a limit order. We will cover that during our technical studies section. The key to gold's direction during the month of March will be the upcoming FOMC meeting that takes place during the third week of March. However, prior to that, there will be two key and critical reports. On March the 10th, they will release the most current jobs report, and then on the 14th, they will release the most current inflationary report vis-a-vis the CPI inflation report for January. Gold, basis the most active April contract, is currently trading up $8.90, almost a 0.5% gain, and it is currently fixed at $1,833.80. Gains in gold were in spite of dollar strength, with the dollar gaining 30 points or 0.29%, and the index currently fixed at 104.925. Lastly, a look at silver, which has had the largest percentage drawdown during this corrective period, had a very respectable gain of 1.12% or 23 cents. March silver is currently fixed at $21.02. If you recall from yesterday's show, I talked about the fact that the 61.8% Fibonacci retracement, that is a retracement of the last leg of this rally, comes in at around $1,815, and it is an interesting and critical point we want to look at for potential support. While this could be a so-called dead cat bounce, as we saw right here, I believe it's more likely to show importance and actually be the beginning of a upside bounce. We'll be more specific in a second in terms of the model that I'm using, but we did send out a trade alert. I've just put it up on the screen, which is to enter a limit order to go long April gold at $1,828 on the limit order, placing a stop below today's low at 1808. We'll talk about our exit targets when we pull up an appropriate chart. Another technical indicator that gives me a high degree of confidence that we could be at the beginning of an upside bounce is a Heikin-Ashi chart. This is a daily Heikin-Ashi, and you can see that we have the perfect pivot with this green doji occurring after a concurrent series of red Heikin-Ashi candles. Now to the trade alert that we sent out this morning. We're looking to buy a little bit lower than current pricing at 1,828, and I am basing this on our Elliott wave count combined with the fact that it found support at the 61.8% Fibonacci retracement. My current count, and this is with a daily chart, looks at our wave 1, our corrective wave 2, our long wave 3. We are now in a wave 4. I believe that the simplest model, in other words, this is only one possible model for gold, will be some sort of an ABC correction completing the fourth wave. I believe that we are most likely at the conclusion of that A wave, which moves counter to the bullish trend and takes gold prices lower into the B wave. The B wave, of course, is a counter trend wave. It goes against the A wave in terms of direction. And in a textbook scenario, we look for this wave to go anywhere between 50 and 75% of the recent leg down. Therefore, I'm looking at the areas of about 1890 down to 1868. 1868 is based upon the simple 50-day moving average, and the 1890 is based upon the 50% mark of the recent correction. That would be the low end of the target. At the high end would be at approximately 1900 to 1920, and that would be based upon a retracement, meaning that the B counter wave goes as high as 70% of the first leg of this correction. Following that, if it is an ABC, we will get one final leg down, but because that leg needs to be above 1791, that is the top of wave 1, I would expect a C wave if in fact this is how gold prices unfold this month, to be shallow compared to the A wave. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.